So there's a couple themes going on in the market right now. What are consumers doing and how are they handling higher prices? How are companies cutting costs in order to maintain profits? And what is the Fed up to? So I want to share some details with you guys and, well, let's jump right in. So you can see the headlines here. How Chili's is preparing for tough times, starting with French fries. And yes, we're talking about French fries. I love French fries, not a fan of Chili's, but I do like my French fries. And one thing that's really interesting is like sort of the experiences that people are having in offices, the restaurants. And when you read this stuff, it says, when people finally ventured out, many full-service restaurants struggled to find and keep employees. A staff shortage that left behind boosts of scowling customers. So people are kind of mad. And we're talking about, say, Chili's, your Applebee's, or Olive Garden, which are kind of like your middle-class family restaurants, right? And they're saying here that the average cost of dinner for two, including soft drinks and two entrees, is about $38 plus tip. And that was our experience as well. When my friend in the USA, it was like $20 a person. It seems like where you went, anywhere you go. And I'll be curious if you guys feel like the costs are the same. And one of the things that's been going on is sort of decline in quality or / shrinkflation, meaning that you are paying higher prices for a lesser quality. And it is a real thing at restaurants. I want to show you guys some more details that I'll talk about in a second here. Another thing that was really interesting as well in terms of cutting costs. So evidently, some of these changed in something that is counter to what I thought. I've been reading that a lot of restaurants were experimenting with automation. Evidently, though, they were saying the robot server, so this is a Rita the robot, and this is in terms of like something like Chili's, they were just saying it was too slow compared to human servers. So I do think automation is coming, but it depends like sort of, probably what you're making and what the robots cost, et cetera. I'm sure you guys understand this. And how does that compare to the human? So they're saying right now, this is not the time to experiment. And this whole article is kind of about how the restaurants are trying to streamline. Take a look at some more details of this. And this is kind of funny where it gets into where the details. Chili's breaded chicken crispers by hand, right? So basically, they're doing these, handmade. So it's going to be a bit slower. It's probably going to be a little bit better, perfectly frank. Because essentially, I think when you do these things by hand, it's more likely going to be fresher, et cetera, as opposed to everything pre-made. And then saying here, typically 3 to a plate, right? So that's sort of it. And then this is sort of like at a conference of like all these Chili's people. And Mr. Hochman wanted more pieces per order when he presented his plan to more than 2,000 Chili general managers at an annual conference last year. Some of the audience gasped. So it was just kind of funny because, if you're in this sort of world, you know what's up. And kind of what they were doing then, basically, and this goes over to, I'm going to show you guys chicken, but just went over sort of the whole thing, be it how they make shrimp or anything like that, or French fries as part of this as well, was, okay, which menu items can we cut that essentially take too much time to make, maybe aren't so popular, and they're just really streamlining their menu. So this is sort of when you go to the restaurant where there may be less choices, there may be different choices, and they may be charging you more money. So for me, overall, it doesn't sound great, the sort of situation with eating out. And this is something that I think a lot of consumers will probably notice. So this is why I'm bringing this up to you. Yes, they are cutting costs in terms of companies, but, can you still get people to come back even though things have changed? And this is also related subject, right? Retailers fear high-flying U.S. consumers are falling back to earth. And there's some details going on regarding, it's like Macy's in here, Procter & Gamble. And I want to read you some of the quotes coming around the market. So this is coming in from Dollar Tree. And they're basically saying families that make over $100,000 are now starting to come to Dollar Tree more. And this is a quote from the CEO over there. The current economic climate is driving more higher income consumers into value retail. And that is from the Dollar Tree exec. And they're referring that as trading down, which we've talked before on this channel. And it's interesting too. We remember it was one of the, I think it was one of the Fed people was saying that they were kind of celebrating that more people were shopping at Walmart. And there was an interesting discussion. So my opinion on that one was like, I always imagine, Walmart or conceived imagine Walmart being sort of like a kind of lower class or lower middle class kind of store, and not something that necessarily want to celebrate that, yay, we're all shopping at Walmart now. But some people mentioned that, Walmart is moving into more higher income areas. So because if you guys have a similar experience with, say, Walmart, but to me, this full disclosure, I've never really shopped at a Dollar Tree. I grew up in Oregon, and I don't remember Dollar Trees anywhere. That might be different now because I don't know. I've been back to Oregon for years, but This idea though that people making over 100, you're on the Dollar Tree, it sounds funny to me, but to be fair, 100,000 isn't what it used to be. So it is what it is, and I can just tell you guys, like we lived in LA, and 100K is just not that much for the cost of living that it is. I understand in other markets it might be, but it depends where you live, of course. Also, too, we're talking about again what are the consumers up to. This is Macy's, the CEO, and he's saying credit card balances continue to rise, and also saying the consumer is under pressure. And you're also saying here as well, you're starting to see some elements of bad debt creep up. So the consumer isn't completely backed off, but we're starting to see some changes in the way they're spending, and also too, we're keeping track of their credit levels. Another thing as well, which I noticed, and I was thinking about this is something that we had talked about recently, was the savings rate. So according to this is saying the savings rate has dropped below 5% for the first time since 2009, when the economy was in a recession following the financial crisis. And the savings rate thing is really interesting, because it was just in a previous video that we made recently where they were saying if you make, a median income and you're saving like 5% a month, it would take you roughly 10 years to save up for a house if you're going to have a 10% down payment. I know I'm throwing a lot of numbers at you, but I'm just saying this 5% thing is really interesting, because they're saying like basically the average person isn't even saving that. So the idea of getting into home is becoming much more difficult for the average person, which we already know as well, which we talked about in just a prior video, meaning that the USA is becoming a nation of renters. And oftentimes people say, Chris, what do you track when you look at the markets and news and these kind of things? I track everything, guys. And so I'm keeping track of all these trends and get a general sense of where things are going. Let's take a look at what else here. This says stock traders are ignoring the blaring bond alarms. And it's interesting because, my opinion, don't fight the Fed or these kind of things. And when you look around and there are decent alternatives, meaning that, you don't have to necessarily be going into stocks and stuff like that. I mean, look at this, the 12 months, this is the treasuries, 12 month is at 5%, the 6 month is at 5.11. And then frankly, these just have, zero risk. You can look at a 10-year, it dipped just below 4%. And so every time the 10-year kind of goes below 4, say goes above 4, kind of is an indicator of where we are. So stocks were up, right? Bond yields went down, stocks went up. Overall, though, I think next week we're going to have some more volatility. One of the reasons is I think it was Federal Chair Jerome Powell is going to be speaking in front of Congress. I believe it's Tuesday and Wednesday, and they've already released a report on that, and he'll probably reiterate some stuff. But you never know what comes out of these interactions when they're talking in public. And you can see the headlines here. Fed says more rate hikes are needed to curb inflation. And again, Chair Federal Powell will testify. Yeah, it's Tuesday and Wednesday. And then this will be Congress. They released the report already. I looked at some of it. It's pretty long. You can find a line, but here's a couple of the highlights of it. It says, and this is kind of what they're going to reiterate, and Congress will ask them questions. So it says, the committee is strongly committed to returning inflation to the 2% objective. They say that all the time, right? This is from the semi-annual report. And they did that on Friday. And it says, ongoing increases in target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive. So the Fed continues to be hawkish. Take a look at some more sort of highlights of the report. More than half of that, I'm talking about labor force here, more than half of that labor force shortfall reflects a lower labor force participation rate, right? So people just aren't necessarily looking for work. Because of waiver retirements beyond that would have been expected given demographic trends. So you had a bunch of retirements. Also, too, you're looking at the remaining shortfall is attributable to slower population growth, which is very interesting, and also to a higher mortality rate due to COVID and lower rates of immigration. All of these things sort of contribute to why the labor market is tight, meaning that in some industries, they can't get enough workers and they have to keep raising wages to get people back. But I've been telling you guys all along, it seems like a lot of it is in sort of like your service-oriented ones, be it like, for example, your restaurants. And this is something that sort of why I was talking about restaurants first. They can't get enough people, so they've had to change their menus. So all these things tie together when you want to understand what's going on around the market. And if anyone's in the restaurant business, I'd love to hear your thoughts on this. Also, we tracked all this sort of crazy stuff going on Twitter. This is a funny one. Well, not funny to Twitter, of course. But evidently they're saying revenue down in the month of December about 40%. That's pretty crazy. I don't know how they keep the lights on over there, to be really frank. But we'll see. Maybe they pull this off. If I had to take a bet, is Twitter gonna, survive or fail? I'm on the more fail side, but we'll see what happens. And like I said, this is just reporting, how they're doing. Another thing that's going on as well, Amazon is pausing the construction of their second headquarters. And it was really funny. I remember when this was a deal, like we knew that Amazon was, looking to build a second HQ, and basically so many cities in the USA were bidding on it, saying, hey, we're going to give you this tax break, and because it brings a bunch of jobs to your city, right? And I remember I was equating it to The Bachelor, where it's like, the competition of cities with who's going to get the final rose. Evidently it was DC, but I guess they're not going forward with it. So that is a major slowdown than before. And to Amazon's credit, right, if the money's not there, don't be building a second headquarters if you don't need it. And evidently they're pausing the thing for now. So we'll see what happens with that. And it just is emblematic of a slowdown of what's going on. However, not everything is falling apart completely. There are going to be jobs in some areas, which we talked about, like the EV sector is growing. It's a real thing. So this is interesting. Volkswagen, right? Volkswagen to build a $2 billion electric vehicle plant in South Carolina. And it's fascinating because this one's in South Carolina. And then I mentioned you guys before, VinFast, which is the Vietnamese company, I think they're still building the plant as of now. I mean, I don't know, things could change this, Mark, you don't know. But VinFast was building a plant in North Carolina. So, some parts of the countries have jobs, and I mentioned you guys this before. Sometimes you got to move, right? If you're in a state that there's just no jobs, like if you, for example, say you move to Arizona or like Ohio, there may be chips jobs there for you, which I've mentioned. And in this case, if you want to work at, say, Volkswagen, there may be, electric vehicle jobs for you, which I think are going to be pretty decent jobs. It was interesting when I saw this. I was thinking to myself, this is a true story. So when I was in high school, so I'm getting old now. I mentioned you guys, I'm pushing 50, but Volkswagen used to be really cool. And even in college, like I remember it was like the Passat. They had I want to say it was the Passat. I could be wrong. Maybe it was the one. I don't remember the name of these things. It was the Jetta. It was the Jetta or the Passat. But I remember they used to run commercials where like they would sell you a bicycle with the car. It was kind of like just the hip sort of, how can I say, just young person sort of outdoorsy vehicle. But whatever reason, Volkswagen just weren't cool for a while. And then these days, if you had to ask me what's cool in terms of that type of car, maybe the Korean-made cars, the Japanese-made cars are fine. I'm just telling you guys, and then if you want to go up from that, then you start to get into electric vehicles and more luxury car kind of thing. So that'll be interesting if Volkswagen can be more cool again. Like I said, when I was in high school, Volkswagens were cool. I've had, I want to say 2 in my life. I have to think about that. I think I've had 2 Volkswagen. Yeah, I think it's 2. I'd have to think about it for a minute though. It's funny, I'm getting old. This was an interesting one. We talked about housing in another video, like how much housing, costs. And I didn't realize it was like this expensive in the UK. So we do have some British viewers. I'd love to hear your thoughts on this. This is saying British parents turn to home equity to help young buy property. And basically what it is that your wealth, you may be wealth in terms of like your property value seems like you have money, but you don't actually have cash to just, give your kids to buy a house. And one thing that was crazy, crazy, this was saying, homes are becoming more unaffordable for first-time buyers. This is in the UK. And they were saying like, was this typical mortgage payments as a percentage of take-home pay is 39.4%. So like 40% of your take-home pay goes to your mortgage. It's like horribly expensive. In the USA, we just looked at the numbers, and it's around like a 25-ish, 30% kind of thing. Like it's not low, but this is like even higher than that. So it's just tough. And I know in some of these countries, like say we have viewers in Australia. Or UK or other places, if you're, on adjustable rate mortgages where the rate is variable and rates are all going up, this could even get more crazy. Something's got to give. I just don't think that this is sustainable. So I'd love to hear you guys' thoughts on that as well. And, you've probably been seeing this around the news, right? Alex Murdaugh convicted of murdering wife and son. I don't cover this story that much, mostly because I'm not in the USA, so I don't see American TV. I do see these headlines of these things, and to be really frank, I saw it, but I was like, I don't know, why are we paying attention to this? What is this? But my understanding of it, I think it's like a wealthy family, and a guy went crazy or something like that. I don't know the details, for really frank. I haven't been following, but I just want to let you know, I apologize if I don't follow these kind of stories, although I probably could, and I'm sure you can write in the comments about why I should have been following it. So anyway, that's going on with the news regarding the Fed. consumers and how companies are cutting costs. And I'm really curious your guys' experiences with restaurants. Are they essentially cutting back on essentially handmade food? And do you feel like that the prices are going up and the quality is going down? That's sort of what I got from what's happening in the market. But I'd love to hear your guys' thoughts on that. So thanks again for watching, and I'll catch you in the next video.